Hi, Warriors. How you doing, Ingmar and Hugo, and my trading warrior brother Ryan and Kman and
Morning, Dale.
the whole crew. So, how are you guys doing? So,
yeah, it's sunny here, mate. We're all happy.
Okay. The market's under pressure, and I think it was last week. I talked about this, the potential of this being a failing rally. We're in here. And it's a big move. And I'm sure people are trying to buy breaks, and they'll probably try it here. But, perhaps this cycle is over for a while. So, ugly looking crude market. Any big news? Like yesterday afternoon, they started selling off the metals. Was it because of some Saudi news or something, guys?
Not that
you
I could
noticed?
see. No, not that I could see. I'm a bit perplexed about these moves.
Yeah.
A bit sharp. That's the thing. If it was a steady drop, you could say it's just market mooching around. But it's quite
starting
sharp.
To look like this. Yeah.
Yeah.
Yeah. I can't believe it's just Biden's visit or planned visit to Saudi Arabia. Anyway, so we have yen lowered today, and there's a look of the daily. I certainly wouldn't be long up here with today's action. What do you think?
I'm long.
Okay, well, that's what makes a market.
Okay. No, I jumped on a break of that 35.60 level. It'd been the top for a while, so just a break trade for me. Stop came close earlier, 135.80. I've got my stop at just above my entry. Came in within a pip. So it's flip flopping a bit. That 60 area, 135.60 area is going to be the crunch line for me. Back below there.
This would say that you're right to be long for another high. But if you see some shorter term TFs do what the daily's doing in the next couple of days, failing to get over 70. So if it starts doing that on a 4 hour it never did, but the shorter term ones, you had confirmed highs 1 hour. So a lot of these will not confirm at new highs. So I think it's 8th inning, 9th inning in there, top of the 9th. I know, just to use a baseball analogy. Any other thoughts on, the dollar? Are we going to make one more move over 106 here, or is this a failing rally here?
I think we've been saying for the last few days. I think we're starting to see us move back into just range trading.
Yeah, for the summer.
Not just for the summer. I just think potentially in between the data. We know what central banks are doing now. So now the market is going to be watching the data to see, is it going to confirm or go against what central banks are doing. And I think that's apart from oil, I think that's what we're seeing in a lot of pairs. Don't look at cable. It's all over the shop. Euro dollar is undecided what it wants to do. Doesn't want to go up. Does it want to go down? Doesn't know what it wants to do. You look at the intraday charts of 15 minutes, the hourlies on a lot of these pairs, and there's a lot of indecision. But that's when I scroll out to the wider time frames and see what the trends are, see what the bigger trends are. Because you could look at a short-term chart and think there's nothing going on. Well, what is going on in terms of the wider trend? And
over 106, and I think that's a level that Blake has talked about too. That's going to be the 50-day. Get over 106, you could start squeezing people, which is just above this high. But one bad day and we're at new lows too. So I understand the quandary. You just have to. If you want to be in it, you have to have an opinion, and just if you want to be long, you have to have stops in under here. If you want to be short, over 106, and to me, it's kind of a coin toss, unless what we're seeing in yields, and I want Kman's reaction to that. Yesterday, when the yen was smoking, yields really weren't, and that's a pretty big sell-off here, and we're at this real critical 320.
Yeah. Hi. Good morning, Dale. Good morning, everybody.
Good morning, Kay.
Yeah, exactly. We are back onto this 320 level, and the dollar yen reacted to it. Also reacted to lower risk, but then we are still over 136, which is still quite lofty.
Right.
But I think on the yields we have to be a little careful. As long as it holds this kind of zone 319, 320, and we don't get any disaster news out economically, which would drag it back down to 3 or even below. My overall view is that we are going to yo-yo a bit inside ranges, and yields as well as probably F.A.C.E. If you look at the bond yields and you look at the gilt yields, you look at Aussie Kiwi yields, they are all moving in sync with the US yields.
Okay.
The US seems to be driving the whole thing. If you look at the yield differentials between Germany and the US, it virtually didn't move. And when it moves up a little bit, euro will move up a bit. If it goes down, euro dollar will go down. It's like the correlation algos are firmly plugged into what's happening right here and now. So that's where Blake comes into play and says data are important. They are indeed very important, in my opinion, going forward from here.
Okay. All right. So silver under pressure. I favor the long side, and it's this could be if we hold the second higher low, and gold too. Similar situation, held the low here, and are we making a low here before we wash out? And it's the only green. It's not much, up $3.50, but not much green on the board today. So neutral here too.
Yeah,
everything's neutral.
Between 21 and 22 bucks on silver, very neutral. Gold tried to go below that 1828.25. It below, but it's not really. I think we're really in a range on a lot of stuff right here and now.
Yeah, it's like the summer doldrums.
Well, or waiting for data.
Is there a peace deal, a ceasefire brewing? Maybe that's what's behind oil. What do you think? You don't think so?
No, he's going to kick off with some other countries as well, because they blocked, I can't remember what country it was, blocked access to by rail to Kaliningrad, which is like a little enclave.
Okay.
So he's threatening stuff there now as well.
Okay.
So definitely no into it. Lithuania. Cheers, Gavin.
Lithuania, that's happening in? Okay. Yeah. I mean, this is a really big hit. No one knows the reason behind this break in crude in the last couple of days. Is it just Biden and a grand deal? Or is it demand destruction? Or,
I was just going to say, or weaker demand outlook.
Yeah.
Yeah, that's why I'm a little cautious here on the yen. I've scaled down quite a bit. Sorry, yesterday on dollar yen in the rally as well, and I'm just keeping like a tiny one open because it's if energy, commodities would and stocks perhaps per correlation would come off. There's less reason to be short yen, right? Because part of the reason that yen weakened was because of those ramping energy commodity costs for their imports. So if that part of the equation drops away, we need to be a bit careful with the yen, I think.
Lucas in the chat just made a very valid point that oil could be down due to the reactivation of thermal energy in Europe. Look, Germany, ramping up coal-powered power stations and stuff like that. So, it's one thing not having access to oil, it's another thing switching away from it, I suppose. So, yeah, fair point.
And we're going to be having steam-powered cars as well, right?
Yeah, this is the new definition of green energy turn, right?
Go back to coal? Yeah.
We close down nuclear factories and we fire up the coal factories.
Or fart cars.
Yeah.
Yeah.
We're going to have cars like Fred Flintstone soon, with our feet sticking out the bottom.
Yeah.
I don't know how Fred, he must have had a podiatrist because he had to brake with his feet and accelerate with his feet. He had no sandals on either, so I always worried about Fred. Anyway,
made of tougher stuff.
I cried when he had to do this. So anyway, 37.10. We're gonna try and take out new lows in the S&Ps.
Yeah, we talked about the S&P yesterday, right? And we said that I said that my bias is still bearish, but there's a good chance of a relief rally. And we talked about 38.50 and then 4100. Well, we didn't even make 38.50. We're back down again. I think the lows are going to be tested. Then it just feels very weak. And if you look at economic data from around the world, UK inflation came in today. 9.1%. Was it 9.1? Yeah, CPI.
9.1, yeah.
And actually RPI, which is what the UK used to use to measure, which includes housing, 11.7 year on year.
Nothing to see there.
PPI inputs expected 19.4. I mean, crazy numbers came in at 22.1, and you can bet all that is going to feed into the economy and into prices. So in the short term, I really don't see what's going to bring inflation lower. Are we close to peak inflation? No. Are we close to peak yields? Getting closer, but I don't think we are. I think we're going to break new highs in the 10-year US. And as with everything, there's no point, in my opinion, to try and call the top or call the bottom. Why do that?
But hey, Stel, listen, good morning, team.
Hey, Blake.
One of the things I've noticed and really over the last few sessions is, and we talked about this, I think, towards the end of last week, we're starting to see some commodity prices come down. You look at, prices of like, I don't know, cotton, crude. Well, you can look at crude, gasoline starting to come down. I think, let me pull up some of the other charts really quick, just on my end. But you're starting to see commodity prices come down a little bit. So I wonder if there's like, some disinflationary pressures coming around. You got soybeans are coming down, nat gas, like I said, corn starting to come off a little bit, not make highs. Cotton's, getting smashed a little bit. So, I mean, do you think that this sell-off that we're seeing in commodities prices across the board the last, week or so, do you think that's going to start to weigh on inflationary pressures? I mean, what do you guys think?
Personally, I think we need to see a prolonged move, and it will eventually, but I just don't think we're there yet. I think, of course, you're gonna have moves in commodities both ways, but the momentum and the whole thing is firmly to the upside. And you're right, we're seeing a pullback, but I don't think this is it, as in the start of a major move. I could be wrong, but I don't think it is.
Okay, and I'm just so you guys can see the charts. Dale, I took the charts from you.
Yeah,
you can see like nat gas coming down.
That's US nat gas, right?
Right, it is. Correct.
Yeah, look at European. It's a different story.
We were talking about the symbol for the European one, but still, just as a whole, you can see soybeans coming down. Cotton. Well, that's not a good chart on cotton because of the change in the contract. But here's a cotton chart.
Lumber, all of it.
Let's see. Let's take a look at lumber. I've got it somewhere, but
there it is.
Yeah, I mean, lumber's come down. You are seeing commodities come down, and then one of the big ones that everybody's following right now is obviously crude oil. Well, here's copper. There's copper, right? Let's go over to crude oil. Crude oil is actually broken, and this is something that I wanted to talk with you guys today, because we're seeing crude oil break down through the channel that we've been following really since April. And, we broke the 618 retracement fib from the low in April to the high that we had this month in June. You can see we're below the 618. We're actually making a lower low on a technical basis. So that doesn't mean that the trend is completely changed, but it is shifting, right? So we're starting to see this shift lower in commodity prices. So that's something that I think we have to be aware of, and I don't know if it's going to, be a top in inflationary pressures as a whole, but it's something that's definitely going to slow down. And then you talk about, the Fed is using their blunt tool to really cap prices. I mean, stocks have stopped going higher. Housing prices have stopped going higher. The Fed is doing what they need to do to raise rates and stop the ascent of prices. This is what they wanted, and the Fed is doing it by raising rates. So anyway,
but although the monetary policy remains extremely stimulative, right? Because when you have interest rates of 2%, 3%, even, I mean, let's say we get there, and you have an inflation that's still climbing north of 8.5%, you're still, by every definition of economics, running a very, very, very loose monetary policy.
I had a conversation with Mark Chandler yesterday, and you guys, if for those of you that don't know, and this might be new news for most of you guys, and since I just turned on my computer like an hour ago, everything is launching here for Trader Summit, but I do some interviews throughout the course of the week with people. And why is this? Let me refresh that. Well, that's coming back there. I mean, you can see these interviews that are done with market professionals that many of know, whether it's I do a weekly piece with Jim Welsh every week, and there's Michael Brown, Anthony Crudelli, Dirk Frzenski, but these are all just interviews. And Mark Chandler interview that I did just today or yesterday, excuse me. He puts out stuff every morning. And by the way, when you're on Trader Summit, you can actually go to new analysis every day. It's right here where it says breaking views. This is his piece from this morning, and you can just read current stuff from analysts that are contributors. I talked to him yesterday, and he actually, I said, when's the Fed's breaking point? I asked him, like, when do you think the Fed breaks? And he goes, in preparation for this show and this interview, I came up with 4 different numbers, and I'm not going to give that away. I want you guys to actually watch the video. But he talked about 4 different metrics that he's using to when he thinks that will get the Fed's attention, where the Fed has broken the market enough to where they can lay off the hiking rates and very hawkish rhetoric. And I thought that was a really, really neat interview. But we were talking about inflationary pressures and just what the Fed is trying to accomplish here. And he's like, even though this is not popular opinion, he's like, I don't think the Fed cares what the stock market's doing. The stock market is just a byproduct of what their actions are. And he's like, they're looking at other metrics. And just so you guys know, he also just some personal information about Mark Chandler. He knows a lot of people at many of the Fed regional presidents. He at one point had aspirations of joining the Fed. I thought he was going to be joining the Federal Reserve this last year, but he says he's not really pursuing that anymore. But he knows a lot of people in the Fed and talks to them, obviously pretty consistently. So
do you think we're going to have a repetition of what happened in 81? Blake, I think it's a very high probability. For those that don't know, Volcker, everybody knows that Volcker increased rates at 20%. What many people don't know is that Volcker did that twice, because he did that once in spring of 80. And then inflation started climbing down. The economy went in recession, but then inflation started climbing higher again. And he had to do it another time 1.5 years later. And that was again a recession. And that was actually the beginning of the end of inflation.
You know what I would do is actually
Steve.
I would check out this interview here on Traders Summit with Ben Maldonado. He might be listening in this morning. Right here, the 400-year epic cycle that he talks about. He actually lays out a chart in the 80s and shows you how long inflationary pressures were persistent for, which is not a year.
Not good news.
No. So this is a really good interview for you guys to listen to here. I'll and Ben might, like I said, Ben listens in here quite frequently throughout the course of the day, or throughout the course of the week. He may or may not be here right now, but he's in here quite a bit. I'm going to put that article in in that interview in the chat box. So if you're in the chat box, you can pull it up and check it out. Very interesting. He's done that same presentation or close to a same presentation for you, Dale, here on the F.A.C.E show. And I think it's worth watching because Steve, you're exactly right.
Better.
I mean, inflation has stayed sticky for a long time in the 80s, but different, it was a different market and different reasons, and not saying that history will repeat itself, but we can definitely learn from it.
Speaking of inflation, Blake, there was a mention in Larry Summers yesterday from Dr. Blanchflower, but having to do with another type of analysis. I don't know if you
Steve, that's Dr.
Yes,
Blanchflower,
yes.
So you know, okay.
I don't know. I don't know though
Chris.
if any of you caught the other analysis that Larry Summers did, having to do with the comparison of inflation between today and the 70s and the beginning of the 80s when inflation peaked. So in essence, he and his team made a report practically saying they didn't want to address the obvious issue of how underreported inflation is. So they did the exact opposite. They said, let's see how much inflation would be back then if we measured it with today's standards.
Oh,
and so they did the exact opposite, right? They brought the inflation we had back then to today, instead of bringing today's inflation back to what it would be with the more honest metrics that we had back then. And the difference between the peak inflation back then, which was, if I remember right, close to 14%, with today, they found out that it was something like 0.5%. So basically, the report practically stated that inflation today is as bad as inflation was back then already.
Oh, well, I'm sure it is affecting the average consumer globally as bad, if not worse, than it was back then. So, yeah, it's it's going to be interesting to see how it plays out. But the inflation.
Don't wait to buy gold. Buy gold and wait.
Well, here's gold.
And I haven't said that since we've been on F.A.C.E and meant it.
Buy gold and wait.
Don't wait to buy gold. Buy gold and wait.
Oh, buy gold.
You could use it, Blake.
Buy gold with weight. By weights of gold. Okay. Anyway,
yeah.
By the way, gold has a nice bid this morning, and we're cracking a little minor trend line. I still think there's a consolidation pattern happening, but you can see gold's here right at the 38% retracement. It's really needs to get above 1880, 1875, somewhere above there, and I think gold will start to firm up. Now, if that does happen, you have to imagine that the dollar is going to start to show some weakness here. Now I know you guys talked a little bit about the dollar yen, Kman, Ryan. I know you guys were discussing this a little earlier, but the dollar yen, I still think it's pretty bullish as long as we're above the 130. 560 level. And this is something that wasn't in the interview with Mark Chandler, but we talked about this off camera, and we were discussing the yen, and because it was about where it's at right now, maybe a little bit higher yesterday, but we were talking about the weekly CFTC data is actually starting to show shorts, institutional shorts have really been paring back over the last several weeks. And I don't know if you read any of the weekly CFTC data and factor that into your equations. Kman, I know specifically you trade a lot of yen, Ryan as well. Do you guys have any thoughts on dollar yen at these levels?
Yeah, well, the 135.60 is exactly the level. It's the break level that everybody's looking at. For me, it's going to be important to hold 134.40.60 in the medium term. But as I said, yeah, we have to look. We have to monitor now what's going to happen with the commodities and oil and stuff, because that was part of the yen weakness. And if they start to turn the other way around, it could be part of the reason why we are starting to fail up here, or at least have a correction. So we have to closely monitor it. As long as it holds here, I'm defending my small long, but I'm not going to be a hero and keep it whatever happens, to be perfectly honest.
Yeah, and I'm drawing a couple of flag patterns that are, they're all bull flag patterns. You can see them
flags everywhere.
Yeah, they're flags everywhere, as I think you pointed out. And as long as we're above this red line, you can see it right here around the 135.60. Give it 20 or 30 pips, because you can probe obviously below it, but everything still points to 138. I have actually orders to short dollar yen above 138. I've had them. I had them since yesterday, and they're kind of sitting out there. They do expire here in the next couple of days. But I was kind of hoping for an overnight move in dollar yen up towards these levels to be on the sell side. Just after having that conversation with Mark Chandler, he's like, yeah, you got to be watching that, the CFTC data, as that data has been turning the last couple of weeks. Some of the institutional types might be out, but it is still a very interesting situation that the Bank of Japan and is in the Ministry of Finance right now. That's for sure. I don't have any yen exposure. It's just something that I've been kind of watching as of late. So let me ask you this. Let's go around the horn here. Stelios, we're seeing a little bit of a pullback in S&Ps. Do you think that we're going to be able to get a recovery in risk, or do you think that we should continue to stay short equities as long as we're below 3,800? What are your thoughts here?
Good question. My bias is unchanged. I think I'm firmly bearish on risk assets. But the question though is, I think that the market is a little bit one-sided. So we are, there's a higher chance of a short squeeze coming up. But if I was, if I had the short from above, I'd just be keeping it. Now, do I chase it down here? Probably not. I'd want to see either a bounce towards 3,800 or a break below 3650 to initiate.
Okay, so you think we're just kind of range bound. By the way, yeah. I almost forgot that we have Canadian data coming out really quick. I want to get Steve's opinion and Ryan's opinion. We're gonna have just a few minutes actually. Just keeping an eye on the dollar CAD, because I actually closed out my short yesterday, and then I reestablished it a little too early. But I'm still in the camp that the dollar CAD stuck between this 130.70 and the 128.70 level, and you can see we're mid range right now, which makes sense. When you have such important inflation data coming out here in a minute. But real quick, Steve, you got 10 seconds. What do you think about S&Ps? Do you want to be selling them here, or do you want to be long?
I'm still short, so that says everything.
Okay, so as long as we stay, what's your breaking point? When do you go, enough's enough? I want to be on the, I want to get out of my shorts. Is there any place that you're like, I don't want to be short anymore?
I haven't really thought of it that much, because fundamentally I'm still very bearish and my entry is miles away. Okay. I definitely don't want to see above 4,300, I would say. So roughly that would be the level I would be looking for, but I don't think we're going to see that level anytime soon. So I'm not really worried about it at all.
All right, Ryan, you have any opinions about the S&P at these levels, or you can fuggled about the price action the last couple of days as well?
Same as I said yesterday when you asked, if you can't get above 38.11, it's a sell. The downside support speaks for itself.
CPI a lot hotter than expected, a lot hotter. We had an expectation of 0.3 month on month, and it came out at 0.8 month on month, and the yearly CPI climbed from 6.8, that was the previous reading, to 7.7.
We haven't seen any revisions yet, but the CAD's not having any follow through with, stronger Canadian data. Now, the loonie, and they call it the loonie for a reason, in my opinion. It tends to be somewhat crazy during data. When you have really important data with the dollar CAD, whether it's jobs reports or inflation data, a lot of times you'll see this completely unwind and go the other direction. That's why they call it the loonie. So just be really careful. I've got a dollar CAD short personally on. It's not a very big one, but I've got one on, expecting some stronger Canadian data. It's not getting much follow through. So I'll be watching it just in case it decides it wants to turn around. Anyway, guys, I want to say thank you all so much for being part of this. And Dale, I know you have an interview coming up. I just want to mention, if you haven't checked out the trader,
why do I keep having trouble promoting our guests?
I don't know.
It's sure. Like I'm being blocked to do it because I hit the button a million times. I'm still trying to promote Chris.
Well, ask, Steve can probably get in there in the admin side and see if he can do it. I just want to mention, if you guys haven't checked out the trader funding program, make sure you check it out. We just had somebody that, since we lit up the $1 million accounts this last month, we actually had somebody try that today. And we have traders that access our cash live every single week. So make sure you check out the trader funding program, because if you qualify, you keep 75% of the profits and you take 0% of the losses. So if you want more information on that, scroll down to the very bottom, watch this little 2-minute video. That is our sponsor of today's show. Dale, were you able to
No, I think Steve did it for me.
Okay. All right. Well, have a great interview. Steve, I'm sure we'll look into that. Steve, Stelios, Ryan, Kman, thank you all for being here. And Ryan, if you guys are not catching Ryan and Kman and Stelios on the Flow Show, be there, Flow Show every day, because they're broadcasting every day live, preparing you for the European and North American session. So we'll see you guys. Thanks, everybody.
All right, thank you, team. Chris, welcome back to
Hey, how are you doing, Dale?
Very good, Chris. In fact, great to have you here. I was thinking about our last talk. Are you going to share your screen here, buddy?
Yeah. Let's see here. Cannot do it while other participant is sharing.
Yeah, they just stopped.
Okay.
They let go of control.
Oh, there we go. Let's see here. All right.
So Chris, where you want to start? What is this?
Well, this is Bitcoin.
Okay. All right. I was going to get here, but at first I want to acknowledge last time you were on. If you pull up your S&P chart, we're in the midst of a counter trend rally, and I think it was after the first break, so it probably goes back to longer term. Yeah, it was 2. Okay. And I said new highs, and you said no. And then you came up with your levels, and you're real bearish on that rally.
Yeah.
Great call.
It worked this time, right?
Yeah, I mean, it was a great call. And also you were bullish Dixie from 90. And if my memory serves me, you had like a 107 target in the dollar.
Yeah, at least. Yeah. Back in, let me see here. Yeah, back around the beginning of January 21 there, I said, it looked like the bottom. We had that reversal there. And the market was just so incredibly bearish at the time. I think it was like over 95% or something. And that
was a great trade.
Plus, potentially up to around 113. But yeah, definitely getting up there. So
and now it seems like the boat is definitely, after this advance, shifted to the majority of people. And even in some of the commitment of traders reports, overly bullish the dollar. Specs very long up here. Is 107 still your number?
I think we've probably got a little bit further to go up here. What I'm kind of watching is we hit this resistance up here that comes off of that August of 01. Yeah. So basically, right around that .com bubble time.
Right.
Excuse me. And then, of course, it traveled down here to the great financial crisis down here at the bottom, and we've rallied back up. But if we run that parallel channel there off them two lows from 92 and then 08 here, with the top being that 01, we've basically hit that level there.
Okay.
That's where we kind of hit that. So, but I think this is still, I think we have just maybe gotten through 3 or just about to finish wave 3. So we've got like this 1, 2, 3. So, either 3 is going to finish up just a bit higher and then we'll pull back for 4 and then we'll get 5 still higher yet. Or we're on 3, we'll pull back 4 and still get 5. So I still think we've got a little bit further to go.
Okay. All right. But, you can't expect perfection at the crap table. 107 at that time to most market participants seemed like a real aggressive call. So nice work on that.
Appreciate it.
Okay, let's go to crypto.
Okay, So, big talk everywhere, right? I mean, it's all over mainstream news and everything. And everybody's extremely bearish. At this point, I mean, it could be the top here. This could be 5 at the top here. And we could be setting into just a big correction of the last 10 years. So, a real big correction. But I'm not convinced yet that that's what we're doing. Right now, we've pulled back with a solid wave 4, not quite 50% of that pullback. We had a great reaction this weekend on Sunday coming off them lows.
Yeah.
Let me see here. Yeah, coming off these lows down here. So we're kind of watching this right now.
Okay.
Do we?
So, I mean, if you like it, you just you get long and you get out of the way under Sunday or Saturday's lows, right?
Yeah, exactly. I mean, if you're good here, you definitely don't want to hold below a drop here because then you're looking at probably, 15.4, something like that is like the next target down. So, But I mean, if you're going to get long now, stop loss under that swing low, look for a breakout right here. If we can get a breakout above this 23.3 level, we should rally right on up here to around 28, 29. And so that should be
okay. And I saw your longer term count was way up there, but if this is 4, a 5 implies new highs, right?
Yeah, exactly. So based on the height here of wave 4, we're already looking at maybe 156,000 or so. But Bitcoin always does the whole excessive rally at the end, and so that could actually end up much higher if it is correct in there. So
okay,
a lot of possibility.
What's really been a freight train has been the weakness in the yen and the strength in US dollar yen. And we're really getting extreme now. I'm wondering, do you have a count to share on that pair?
So right now, looking at this locally here, I mean, let me kind of zoom out here a little bit. Here we go. So we've got the idea that maybe we're doing this whole 1-2 thing here. And so which would give us a lot higher move up. Locally here, 1, 2, 3, maybe even 140, 141. And that's just interior there. So kind of still zooming out here. Basically, you have your large count, your 4 down here. And this is what we're working on is that 5. But it just, like you said, it just keeps extending. It just keeps on just rallying the heck out of it. And, and it's like, it's one of those things where you don't want to short until there's really a reason to short, because you're going to get caught.
Okay. So you have a 5 possibility around 37.5. Am I reading that correctly?
Yeah.
And that may end 3. Or that's
that may
one
end
of 3.
One of 3.
Oh well, okay. So I mean, this is
3, 5,
this is just beginning. So you get a nice pullback, and we haven't even finished wave 1.
Yeah, quite 3. Potentially. Yeah,
okay.
I mean,
so
what I like
can
here,
imagine 3 of 3.
Well, I mean, even if we take these counts off here, I love this structure. When you're coming in sideways here between that pivot and that R1, usually you'll test that R1, you'll come back down. And if you get a breakout back above that without getting down to the pivot, usually it's extremely bullish and you run up through the R4 or R5. So, just kind of watching at the moment. Now, this is the 4-hour chart. So, obviously by the time it gets up here, it'd probably be, the next week and pivots will change. But this is pretty aggressive right here. If we get the pullback and continue up without coming near that pivot, we should rally up pretty good.
Okay. So let's get back to the S&Ps, because I know even some bears who are right about the top are looking for a bear market rally to ensue. They've been looking for it for a little while. Does your work say that we could get some kind of face ripping, short covering rally coming in here with crude coming off and some of the inflationary pressures that the market was worried about?
Yeah, it's a possibility. The count right now I've got says 1, 2, 1, 2, and then potentially finishing up. We've got a 1 and then a flat for a 2 here of 3. So if this count is correct, we won't get that. What we'll get is this rejection here, and then you'll get like this third of a third kind of rally, or not rally, but decline there, which will really get people's attention. The third waves are the big ones, right? So
yeah.
That's what we'll do. But what we're going to watch here, there's a lot of overlap kind of coming in here a bit. And so there could be another view of this that kind of takes us back up here. If we're breaking out above, what is this here? About 42.
42. Yeah.
Yeah. If we're breaking out above that, I think we rally a bit higher up here, 45, 46, kind of getting up in this area. And it suggests, maybe this is 5 down maybe, and that's so it'd be a 1 and a 2, and then we get the big drop. But it kind of just depends on what happens here. Do we kind of break out up toward this area, or do we find resistance in here and drop on down?
Okay. Highest conviction trade for you going forward for yesterday, first day of summer. Someone's asking, Chris is from Texas.
Yeah.
Okay. So they recognized Richard felt at home because of your accent. All right. So
that's awesome.
Yeah. So your highest conviction trade or position, or if you don't have one, that's okay.
That's a question. I wish you'd asked that probably, 6 months ago.
I did.
Right now, I think everything is really just kind of at that kind of iffiness, that kind of consolidation, potential reversal, potential continuation. I think Bitcoin's a good chance right now, long on that, as long as that bottom holds right there, because we've just come down, so far, and we'd spent like, a year and a half going sideways. So
Let me ask you about this, Chris, because I know you're also, being a dollar bull, you've also been bearish and probably still are bearish in metals, but don't you have to respect how well gold has, even though it hasn't performed on the upside, how well it's held up through the rise in yields and the strength in the dollar and everything? Is it?
Well, I mean, I'm not one of those people that really kind of follows this whole gold as a hedge against, is a hedge kind of idea. I just kind of see, gold and silver as just tradable assets. And so, if I'm looking at the chart here, I'm going, man, it looks like a double top. If we lose that bottom, we're
right.
You're dropping back down there. And for right now, it just seems like we're just finding some support right here on this high volume node, but I don't see any compelling reason. I guess because I don't buy into that whole gold narrative, any real compelling reason why it has to rally from here. The chart seems to scream that it wants to go down. But of course we need that, that confirmation that little bit further there, but I mean, it's just not my thing that way.
And then you're still bearish silver. You have downside targets there.
Yeah. I mean, nothing's really changed. Let me see here. Let me pull this up real quick. Man, oh man, I tell you what, TradingView has been running a bit slow here lately. Let me see here. Yeah, again, kind of looking the same idea here. I've got, if we continue to drop down, we drop down below wave B there. So I've got this wave circle 3 target down here locally at 19.265. But, again, I haven't changed anything from where I was, gold or silver. Still looking at that, below 10 kind of thing, maybe, right around 8, 7, somewhere right there.
Okay.
Yeah.
Okay. And yields?
Oh, let's see. I do not have a chart on that at the moment.
Okay.
Yeah.
All right. Trying to think how about this break in crude?
Man, crude, I'll tell you what.
I mean, you're a Texas guy, so, what do you think of what's happened? Is the cycle over?
I think there's a good chance it is. Let me see here. I've got a chart right here. Maybe pull it up here. There we go. Yeah. So I've been kind of watching this as potentially done. Potentially, we had this all-time high back on July 11th of 08 at that 147. Right. I think you remember that. And so, I've got this potentially as a 1-2 looking at, looking at 3 coming down here. Let me see here. I think that's an old wave 3 target. Let me just pull this.
About $80, $60.
Let me make sure which one it is here. Yeah, probably around that 62, 64 kind of area, maybe.
Yeah.
And so, again, if this is the top,
there's nothing to be long. There's nothing to be long.
Right. I mean, everything's just kind of.
This is when this is a scenario that you talked about a year ago when it was right to be long everything.
Yeah, exactly. And then we're kind of getting that reversal off there, and things take time to reverse. You know that, and unfortunately, the newer traders kind of want that to happen yesterday. I mean, I think we all do, but
did they let you out of the mental hospital? I know you got committed for talking about the scenario a year ago. People probably, Chris has lost it, buddy. I mean, he's a deflationist and actually thinks prices could go down while the Fed is hiking rates and everyone's talking inflation, and you're a bear on markets. So you feel like you start to have a lot of company yet, or it's still early in the process where people haven't embraced gravity?
I think we've got a lot more in there now, but it's people aren't acting the same way in the market, at least in the stock market there yet. It seems like we've got a lot of bearishness there, but the selling just isn't there to match that kind of sentiment yet. Which is why I think, we get that third of a third, and that thing starts dropping. And I think that'll change. I think people finally, those that are holding out will finally sell. But I think a lot of people are still kind of hoping for that reversal, not even a bear market rally. I think a lot of people are hoping for that full on reversal, because you got the Fed coming in and doing their thing now. I mean, just being overly aggressive, always late to the party, always overreacting. Everything is already coming down. NASDAQ topped in November last year, S&P and Dow topped in January of this year. And now the Fed gets aggressive with a 75 basis point hike, after 50. And, we hadn't even seen the 50 since the dot-com bubble back there in 2001. So, I don't think the Fed can continue that. I think they're going to have to say, whoa, wait a minute here. And I think that's what people are kind of betting on. So they're not really ready to accept that maybe that top may be in.
Right. Yeah. I recall asking a guest, do you think the Fed is making a policy error? He said, they always make policy errors.
All the time.
You could count on it.
Yeah,
so,
exactly.
All right. So, pretty much the scenarios, a lot of things you were talking about, manifesting and, great work, Chris. Maybe you could show your website now, and people are interested. You have any kind of trial that you offer, or a newsletter?
Right now you can go to howtotradetowin.com, and you can get your first week for of tier 3. It's our top level where we do all the education, everything for, I think we got it for $13 for the first week. And then if you continue on, you'll get your first month half off. And so, just even if you come in for the week, come on in for the week, try us out, see if you like the education and whatnot. We got more than you ever be able to go through in a month, but got it in there.
Okay. And pretty hot down there in Texas?
Man, I'll tell you what, there are more than enough memes circulating online about the heat here, but I'll tell you what, it's it's just summer in Texas.
Yeah, I know. High desert, California. I can relate. So thanks, Chris, a lot, and nice calls, and we were at inflection points. It was easier to make big calls 4 or 5 months ago.
Yeah,
6 months
exactly.
ago.
Exactly.
So now, how do you tell your students to be patient now?
Yeah, that's honestly the biggest thing. Pretty much everybody comes in. We all come in thinking the same thing, and then the few of us that are fortunate enough to figure out, well, maybe we don't exactly understand how the markets work, and we pay attention then and change our views. But yeah, patience, man, it's the hardest thing, and but it's just like, man, you have to do it. There is no other way around it. You have to be patient.
All right. Well, we patiently await your next conversation with us this fall.
Oh man, I appreciate it. Yeah, looking forward to it. We'll see where we go from here.
Yeah, Chris, have a great summer trading season to you and all the people that hear your words and read your work.
I appreciate you. Thanks, Dale.
All right, that's it for today, guys. Alexander's thanking you, and good hunting, everyone, the rest of the day. You have the team on the morning edge in 25 minutes. Good hunting, and remember, don't just count your pips, count your blessings, and go Texas.
There you
Talk
go.
to you later. Adios. You're welcome, Tom.